If you slept for about 16 hours yesterday and woke up just now, you would think that the cryptocurrency markets hadn't really moved much. After yesterday's highly volatile movement in Bitcoin particularly, which saw several exchange outages and over 35,000 Bitcoin move on change, markets have settled down a little bit to current levels of around $9,500. Meanwhile, United States markets remain bullish. It's almost like portfolio managers do not have access to the mainstream media, to the news channels, of the reports of ongoing civil unrest spreading across the country. Stocks are near their highest levels in 3 months. And the question is, are we going to continue to new all-time highs, or is a massive correction waiting in the wings? Find out in today's exciting episode of Breaking Bitcoin. Welcome back to Breaking Bitcoin. This is your daily source for everything cryptocurrency markets and personal finance. Hopefully everyone is doing fantastic today, wherever you happen to be, and however you are tuning into us this afternoon. Of course, coming to live from the quarantined above ground bunker. Today's show, as always, is brought to you by the Cracking Crypotcurrency Premium Trading Group. There has never been a better time to learn how to navigate the financial markets. Whether your interest is cryptocurrency or Forex, stocks, or derivatives, the Premium Trading Group certainly has you covered. You can join our community of professional traders and learn how to build your own objective, data-driven strategy. If you're tired of trading with your gut, as I was, or seeing poor discipline and trade management sap away your profits, make the change and join us at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Like I said, we've got a lot to talk about today. We've got a fantastic show. The first thing that I want to talk about, and then we'll get into the markets here in just a little bit. Positive news, when we talk about global markets, positive news coming out of Germany as they are considering another wave of stimulus, and unemployment levels have begun to slow in their rise. They're higher than desired, but slower than worried about. Watch out for the European Central Bank's interest rate decision tomorrow. That's going to bring some volatility into the Forex markets. There is some positivity, particularly coming out of the sterling and the euro. UK and Eurozone PMIs were better than expected yesterday. With regards to Brexit news, maybe that's a mixed bag because although the sterling did push off of its lows in yesterday's session and a little bit today, this was mostly predicated on the idea that the UK was going to compromise on some of its red line issues. This brought a little kind of hope to the market, maybe because a compromise is better than nothing. But the Prime Minister's spokesman did rebuff that today this morning as, quote, wishful thinking by the EU. So we'll see. Biggest news is most likely China's economic recovery. Compared to all the other nations, China has put in the biggest economic recovery. We have data that shows the Chinese service sector is at its highest level in 10 years, among other things. So with that in mind, we're going to be covering Ethereum 2.0 as well today, because I know this is obviously a large fundamental in the crypto markets coming up. So I want to convey the best as possible our information and knowledge about it. We're going to be participating in the experiment. So we're going to be staking 32 Ethereum as well. So we will be kind of live to let you guys know the fun and maybe danger. I don't know. We'll get into it. But let's get to the markets. Let's talk about the technicals, and then we'll break down everything else. All right, here we are in the live scene. Let's start off by taking a look at, I kind of want to start off today and just kind of pause and look at the big macros, right? Like where Bitcoin is, big picture view, all right? Now, big picture view, Bitcoin is still at the upper boundary of the range that it has been in for 2 years, right? $10,000 psychological level denoting significance, although it's simple math that, hey, we have to trade higher than 10,000 if we're going to go higher. Like if we trade at 11,000, at some point prior to that, we traded at 10,000, right? So obviously we have to trade higher than 10,000 to go to higher prices, but many market participants have woven a narrative around this particular price level, 10,000, right? And as usual, there are some technicals that do correlate to that particular narrative. Usually there's not, but in this case there is. 10,200 marks the top of what Bitcoin's highest high volume node on the volume profile. So as we can see from this particular chart here, this is the long-term volume profile on the logarithmic scale of Bitcoin. I'm using the Coinbase chart here on the weekly, and we can see that 10,200, it's actually 10,214, but again, wiggle room. 10,200 does denote the top barrier of that last high volume node, the spike in the VPVR, or fixed range, which is actually what I'm using on the chart to measure a fixed range of the volume profile, again, stretching from the 2017 high down to current price. And yeah, that's fairly significant. That's fairly significant because we do have a small window above that that stretches to 12,000. As you can see, that it did act as wicking resistance on previous tests of this. We saw heavy buy-side absorption at the previous high at June 2019. We don't currently see that yet, although this weekly candle might be indicative of that. The previous retest of this level, we saw a doji. This current level, we are seeing what might end up closing as a gravestone, a reversal candlestick. So keeping this in mind, but it's certainly at this level after multiple retests of the $10,000 resistance level, breaking above it on a significant time frame would be fairly important, or at least many people would consider it. And do not underestimate the volume that can pour into the markets when people believe that something significant has happened, right? Now, 10,300, just $100 above this $10,200 level, marks what I could possibly consider our closest level. Let's get in. This is the classical chart, the classical TA that I've been talking about. Does mark our most significant level, or our closest significant level of horizontal resistance. This is the previous high where we previously reached up and tested these levels back in February of 2020. We can stretch back and see that this level is significant all the way throughout 2018 as well. So this is an important horizontal resistance, or can be construed as such. Again, this anchors back to October 2019 if we want to get certainly technical on the actual level. Now, in between these two horizontal levels, right, let's zoom in a little bit. We have this descending trend line, which is coming into contact with current price action. That originates from the market high in December of 2017, received another retest at the high of the June 2019 bull market, and where we currently find ourselves. We just touched it properly for the first time 2 days ago and initially rejected off with yesterday's high volatility sell movement, right? So Bitcoin's wick mission to the upside, which occurred 2 days ago. All right, so that's kind of the larger picture idea. Now, it cannot be ignored that over the last 2 years, right, let's just go back to that long-term chart. It can't be ignored that over the last 2 years, you were well served to consider the current range that price is in as a good selling point, right? And this has been for the last 2 years. The most conservative position here, therefore, would most likely be to secure long-term profits on Bitcoin holdings and wait for resolution of this high volume node before proceeding, right? Wait for the break of 10K, assume a large rally following, and potentially re-enter into the markets, right? Because of course, the two significant options are a break of 10,000, which I think would show or give us impetus for rapid acceleration toward potentially new highs, or a breakdown of this level, which would be confirmed by a range break of 8,600. We can see that over here on this chart as well. See the current support level for Bitcoin's range, a break of 8,600, which would, in my opinion, because we would be entering into low volume nodes in either of those cases, right? We're in a high volume node right now, as I've explained. High volume nodes act as train stations. This is where price likes to hang out and consolidate, range, and or chop for quite a while. And when we break out of these ranges, which you can identify range breaks, as I talk about in the time transformation video, on strong candle body closes in the direction that you want to break with high volume. Typically denotes a high probability that this is actually a break and not a false movement. However, as with all things, there's nothing that's 100% certain. Of course, we did see high volume on what could be considered a range break with the candle 2 days ago. And what do we see? An immediate retreat back down into the range. Could be just a test. Let's watch. So in either case, breaking above 10,000 or breaking below $8,600, we would be trading outside of a high volume node and into a low volume node. And what happens to price when we enter into low volume nodes? We tend to accelerate very rapidly to the next high volume node. There's not often a lot of consolidation. This is the definition of the area in which you will see trending behavior, right? Strong consecutive candle closes that follow in one direction and are the most profitable and easiest trades to take, which is why we focus on those. And breaking, we've talked about targets to the upside. If we break 10,000, everybody has those, so I won't waste your time with those. Probably quite high. Targets to the downside are a little easier because we've seen where price has accumulated. Price has just stayed at prices below 10,000 far more frequently and traded there. Bitcoin has traded hands for those prices much more, so we have better data. So we have the fair price accumulation level, as I call it. Let's go back to the VPVR chart. That's between roughly 6,000 and 7,000. This is the point of control for the entire Bitcoin range of the last 2 years. Again, 6,000 to 7,000. Another important high volume node where we could fairly accumulate or safely accumulate, in my opinion. Again, a good area to buy Bitcoin. Or if we break that range, potentially down to the, as I like to call it, the back the truck up accumulation level between 3,000 and 4,000. Again, wiggle room. Price now inside of, okay, so down to the back the truck up accumulation range. In the current range that we're in, right? And we can just see this on this chart as well. In this current range that we've been in over the last few weeks or months, well, let's actually just get a good beat on that since we broke up into here at the beginning of May. So really the last month or so, price has been quite choppy. So trend following traders can be well served by identifying a range bound area as opposed to a trending breakout area or opportunity, right? This is the purpose of having a volume or volatility filter, which is a component of a PTP system, right? You don't want to let your capital get chopped up by the markets. Now, Now that we've kind of talked about that big picture, let's go to the more particular technicals and talk about what's going on. All right, so we'll pull up the daily charts. We have, again, BTC USD on Bitstamp. 2 days of back-to-back baseline breaking. This is obviously the type of whipsaw that trend-following traders do not like to see. And accurately, the baseline indicator protected us from this volatility because it generated no trade signals on both candles, right? Now, on today's daily candle, we are getting a trade confirmation notification, letting us know that we are in a safer position to take a trade because volatility is low enough that we can actually enter safely. However, Parallax is not yet confirming this short sell trade, right? We also do not have volatility confirmation from Wada Atar's explosion level. This is with the explosion level false positive filter turned off. So we're just looking at raw volatility today. And these are the default settings of Parallax. Now, Minx, momentum-wise, Minx is generating a line cross sell signal in conjunction with being below the Hall moving average 60, which I am currently utilizing as a baseline. So, in summary, indications are leaning bearish on the daily time frame, but there is no full confirmation right now to justify a swing trade to the downside. Right now, if we were to close below 94.93, which is actually where the breaking Bitcoin initiator is, that would be a pretty strong impetus for me to open up a short sell trade. Therefore, swing trades currently do not have a strong directional bias. We are in a range bound area, and we should assume that Bitcoin will remain range bound and take trades based off of that, okay? And wait until we have full confirmation for putting our capital at risk for a swing trade when we have strong directional bias. Now, if we go to the meso timeframes and look at what's currently going on with Bitcoin today, now we're on the derivatives chart for ByBit BTC USD. Minx is indicating that we are in the bearish control zone. We're below the 0 line on Minx. And with this recent line cross upwards, which occurred about 8 hours ago, it would hint towards a long, right, on the meso timeframes. Now, we did not get oversold or really deep into the bearish zone here on Minx. So this would be a range setup to take with low risk due to the weakness of this particular signal. It's not particularly strong, right? Now let's go down and look at the lower time frames. I'm on the 45-minute chart, same thing. BTC USD derivative contract, the perpetual on ByBit. Now, ISISbot, which is the lower time frame bot that I'm working on right now, did generate a bot. Actually, it generated a sell signal here at the high, like at the actual high, like the topmost candle. And it generated a buy signal at the low. It did generate a buy signal in the lower range over the evening hours around 94.80 price level. Now that has already generated its 1 to 2% profit movement. As we can see, we had some accumulation and then that's nice run up right there. That was your opportunity to take profit. Now currently we find ourselves trading above today's point of control. With, if we look at the BitMEX funding and premium index, we can see that we have positive funding and neutral premium, neutral backwardation. So price is at a slight premium, but I would consider this neutral, right? You can also see that we are at range lows with 9,300 serving as the current anchor or horizontal support level of current price action. So at these lows, price, I want to point out, was, if we zoom in here, so prior to this morning and this morning's trading session, so overnight throughout the Asian trading session, price was in backwardation, indicating heavy retail selling. However, not to an extreme level, right? If it was an extreme level, you could make a stronger bullish scalp trade to the upside case. But it was in backwardation. This does indicate a weak bullish bias moving forward. We had a lot of, after a large movement, retail traders came in late and tried to short sell the bottom, and price is likely to move up and liquidate them before it makes a large movement. So we have a weak bullish bias moving forward intraday, and that does give a little bit of confluence to the 4-hour Minx line cross signal. So let's talk about levels. Again, if you want to trade levels, $9,300, I would say, indicates the current support level for where we are currently at with Bitcoin's price action. Senior analyst Alex, funny, had indicated this level back on Friday as an area to get long on, and we did end up touching that area because, of course, we longed this area and we were looking for a re-entry. He identified that $9,300 area. Actually, it was a little bit more conservative. I believe he did say $9,350, and we have found that level to be very significant because that is where we saw on this sell side movement that was generated here, heavy absorption, right? So I would watch 9,300 to break to the downside. That's our current level of support. and where we have seen heavy bull absorption of sell-side order flow, right? As we can see, these heavy wicks to the downside, indicating absorption of sell-side order flow. Lower prices on a break of that level would be quite likely, and we can just kind of zoom out and look for potential targets, looking at previous points of control. And of course, where is there liquidity to retest? As I said yesterday, we have already traded above, like you can consider Bitcoin's price a range, and where is liquidity at? Well, the liquidity is in many areas, but it is almost always above swing highs and swing lows, right? This is where traders, retail traders, place their stop losses. And this is where institutional order flow or whale order flow sets their limit entries to get filled, right? Or utilizes these opportunities to execute high market sells in moments of high volatility. So we have already grabbed liquidity above the local swing high. Where's the local swing low? Well, that's down in that $7,700 to $8,000 range. That's a pretty deep correction, right? And I think we have some confluence to start heading that low if our first sign could be breaking 9,300 and breaking the current support level that we have. That's the scenario to the downside, right? So you can certainly plan around that. I certainly have. My posted trades went out this morning to the premium members. Otherwise, if we look to the upside, as I said, we do have a weak bullish bias intraday moving forward. This can be invalidated again if we trade below 9,300, potentially 9,400. But what I'm currently looking at right now, you're not unjustified by looking for intraday long setups for retests of either the market inefficiency around 9,700, 9,750, or 9,950, 10,050 to retest the level of sell side initiation, right? Because this is where position sellers are, and price generally after a large movement, kind of like filling a CME gap, goes back to the way that I always look at it is, a lot of sellers put on positions here, and if the bulls are inclined, if there's enough buy side momentum, bulls can push price up and test the level where sellers became positioned, right? Opened up short positions, and they need to hold that level because if price goes above where they entered into their short, they're going to be in drawdown. And, large order flow, like whale order flow, they do not like being in drawdown. Like this is why they enter below swing lows and enter above swing highs, because they do not enjoy being in drawdown. They don't like being in drawdown. So this is where we can get the battle of the order books, where whales push against each other, and you see a lot of spoofing and a lot of market orders executed, and order flow all over the place. Because it just depends on if there's the bulls out there who want to push price up and kind of gut check the position sellers, and we'll see who's stronger, right? Right now, not a whole lot to do. I would certainly be trading with low risk if you're taking intraday movements to the upside, and I would certainly be setting up protective orders to protect you in case price breaks some of these levels, right? I wouldn't be swinging long outside of the range currently. Far, far safer to identify the area that we're currently in and look for objective breakouts of these levels, at which, again, if you have a good PTP trading system, will identify, right? So I put up a bracketed style trade to take advantage of today's range and be protected in case of downside breakage. And also take advantage of the intraday potential opportunities to the upside, right? And on a macro level, as I said, the most conservative thing here to do is certainly to be flat. And so for those of you buy and holders out there, either A, continue to buy and hold because I buy and hold Bitcoin. But if you're just a completely off the couch, you just tuned in to see what's going on with Bitcoin's price. Again, as I said earlier, over the last 2 years, historically good profit taking area. And if we do end up getting a break above these significant levels, most likely there will be a very profitable acceleration. So not a whole lot of opportunity loss. Even if we get a whack-a-noodle candle to the upside and you lose out on $500 or $750 worth of movement, I think you've still got quite a bit left. So waiting for that break is a good conservative movement play. All right, looking at the broader markets for today, we can see, let's just refresh because I have said silly things before. But looking at the broader markets today, again, I talked about this yesterday, as did Alex. Altcoins are where it's at. And again, we already saw from the signals that went out last night at daily's close for the premium members, we saw some good profit taking already starting today because altcoins are where it's at. Bitcoin is relatively bullish. It's in a good profit taking area, and it is range bound, and attention turns to the altcoins. These are the times when altcoins perform very well. So again, I'm playing altcoins pretty heavy right now. And again, we've talked about this for a while. Big performers over the last week are Cardano, obviously, Link, and of course, Ethereum. So let's see. We also got some good performers today in the form of Numenair. I know that's a Tika Tawari favorite, and Verge, which we did go long on. Sia Coin, which I think I've got a ton of Sia Coin laying around somewhere from the old days of mining Ethereum. So, back in the day when I was mining Ethereum, you could, with the Claymore dual miner, you could select a second coin to mine as well. And it was my friend Scott who actually turned me on to this because he mined Sia coin as well as his secondary coin with Claymore, and as did I. So that was pretty interesting. So I think I've probably got a big old bag of Sia coin laying around somewhere. It's probably far lower than, but again, I mined it for electricity. But anyways, LRC up as well. Komodo doing well. Cardano having another good day. Miota, Verge, and we'll take a look at a few of these. This is, again, don't consider this finalized. This is an alternate system that I'm working on, an alternate PTP system. And potentially I'm working on having a PTP system that can utilize kind of free and public indicators so that I can show people good example templates. Having said that, let's take a look at Cardano. And then we can also look at it with classical TA, but we'll just be kind of veering off the tracks a little bit for today. So we'll look at Cardano BTC, because again, I think that these are showing the biggest gains trading against BTC and not actually USDT. So good opportunity to stack sats and take advantage of these markets. ADA BTC is quite bullish. I mined XRP. I have no comment. So ADA BTC is quite bullish. We are obviously in overbought territory on the daily time frame. Time transformation down here, which is a proprietary indicator, so I'll have to work on that, but is indicating purple dots of death, but no sell signal so far. We haven't actually seen the cross under. And of course, as you know, being overbought is always an indication that, hey, this is generally a good area to take profit. And if you wait for a sell signal, right, for any indicator, I don't care. People say like that there's things called leading indicators. There's not. There's all indicators are based off price action. And while you can make predictions or write predictions into the algorithm, leading indicators don't really exist, right? Like the best that you can do generally as a manual trader is identify patterns in price and in your indicators, and then attempt to react before they signal. So, for example, it doesn't matter what reversal indicator you're looking for, whether it is a stochastic cross under or crossover or a Fisher transform cross or a Minx. It doesn't matter. It doesn't matter what the indicator is, right? Let's just talk about line cross indicators, momentum oscillators that have two lines that go overbought and oversold. And classically, if your momentum oscillator is overbought and the fast line crosses into the slow line, that's a sell signal, right? Well, for that to happen, there has to be sell side pressure. There has to be a red candle that's put in, right? Because otherwise, if you're just continuing to move up, then there would be no reason for your fast line to move below your slow line. So you're already going to miss out on profit opportunity if you wait for that signal. Having said that, that is the way that I do it because objective signals are better than subjective interpretation. Always has been, right? Quant over discretion, 100%. Having said that, again, good profit-taking area for ADA BTC. Bullish. I wouldn't say that the looking at this chart, the trend would not flip on ADA BTC until we trade and close below 721 sats. That's the baseline here that I'm currently utilizing. Closer to 775 would certainly be better for continuation, but again, we are overbought, which disqualifies continuations for me. We're just not in a good area to be getting long on ADA. If you're already in ADA, this is certainly a good time to be looking at setting a trailing stop loss and making sure that you've secured some profit and that your trade is in a no loss situation. So ADA continuing to look good. I do not see much to say on this momentum wise moving forward. But ADA, one of the best performers over the last week. Link is as well performing pretty okay over the last few weeks, but Link, of course, is a massive performer over the last year or so, right? Link, obviously a big favorite, generated a large, loyal following. People are starting to ask, hey, man, you need to trade your crappy Ethereum in for that new Link, man. Get some of that sexy chain Link. All right, so looking at Link, we are bullish. I think that although we were below the entry qualifier yesterday, could have made a case for a re-entry yesterday. Looking at money flow, which is in my opinion, a better form of Chaikin money flow. We are positive, so we have positive volume flooding into the markets. The true strength index is positive, showing that momentum is to the upside, and time transformation actually gave you the buy signal on this current candle. So again, past what I would consider optimum entry level, I wouldn't actually recommend an entry into Link BTC at this point in time. Safer entry is going to be between 45,349 sats to 43,103 sats is a better entry area. So outside of entry range for me, but I do think that if one is holding a link trade, certainly looks good. Certainly looks good. I would continue to hold that trade. And Ethereum. All right, let's look at Ethereum. First, we'll look at Ethereum USD. Let's just go ahead and look at spot Ethereum on Coinbase. So yesterday's Bitcoin sell-off extravaganza pushed Ethereum down off of its kind of bullish march. But of course, we can see what I would identify as some distributive behavior right here. Movement up, large candle down, movement up, large candle down. So certainly we have hit somewhat of a wall here on Ethereum, right? There are large position sellers attempting to unload at this area. This is indicated by the large sell side volume. Now, to their credit, bulls have held the $230 level pretty well, right? We did slightly wick below it, but it was bought back up, and we currently see us forming a weak doji. Having said that, we can see that money flow is quite positive, indicating that money flow is to the upside. However, notice, I want you to note, with an indicator like money flow, it takes quite a while to go from positive to negative, right? It certainly identifies when things are good, but when you get to the end of a trend, it can take like a week or so or longer to actually get that flip from bull to bear. We use that baseline anyways for that because we don't actually trade the reversal. We let, when price is above the baseline, we're like, great, we're going to trade trending longs, right? And if price wants to pull back to the baseline, we'll just go long again. We're not actually going to try to take the short sell or the reversion to the mean strategy where, price is now overbought, but bullish, but it's going to correct. So we're going to try to take advantage of that trade. I don't trade like that. That is trading against the trend. And that is like, stepping over dollars to pick up pennies. I've always thought it was the silliest way to trade. Unfortunately, so many traders are just trained and conditioned through, I think, crappy education and material out there on technical analysis and trading strategy to do this. So please don't do this. No reason to. I would say that Ethereum is certainly bullish above $218, $219. I don't really have, I couldn't recommend an entry into Ethereum at this point in time. Again, we're not in what I would consider an optimum entry area, which would be between 219 and 232. So I would just be patient. I would hold Ethereum longs if one is long on Ethereum and just wait. Having said that, we do see a potential sign. This isn't a sell signal in my book. This is a cross under, but not an overbought territory. We do see a potential catalyst here for a pullback on Ethereum with the time transformation cross under. So we're still in bullish territory. I would wait for the cross back up above zero to be going long on Ethereum. So no entry today, no entry right now. I think you have a strong case to hold the long though. All right. Oh, sorry. Come on, Jan. Let's go. All right. Get a little water in my beak. All right. With that being said, I don't have much else except for, let's use this new baby and look at, first off, our ETF indices. So, of course, as we do, we like to look at the DIA. Stock market's still bullish. I still have my long exposure open to traditional equities. I have several equity trades in as well as commodities, mostly for the equity market in the form of SPLG. But DIA doing quite well. DIA remains bullish. We did generate a sell signal on DIA over here. And as I said, I would not recommend a re-entry because we got that crossover in overbought territory, looking again at this particular system. So a little risky. I think one potential movement could have certainly been on the sell signal to not heat it, set a trailing stop loss. Of course, you could continue to let your profits run. But again, I know from testing that strategically and systematically, that does not produce the best results. So I would, in this particular case, if this swing long was taken, be happy with the profits and just wait for a correction to re-go long. Otherwise, if you've got long-term positions in the DIA or if you bought the dip, again, as I've said, I am of the opinion that overall we're entering into an area where I think that it is unlikely that the market continues to make new highs. However, I am certainly open to having my mind changed. It is objective data from the market that generates my trading signals, not my ideas. However, having said that, when it comes to equities, right, and when it comes to long-term positions, it does behoove you to have some fundamentals and to generally not trade against your fundamental plan. And most individuals here are going to have not just going to be trading the ETFs and equity markets. Like they have investments in them, right? This is the stuff that 401ks and pension plans are built on. So you have to ask yourself, to what degree is the market likely to just magically recover like this and continue marching up? to what degree does it concern you that you're seeing hedge funds and portfolio managers exit their positions all throughout this correction and rally, and you're seeing retail traders, so dumb money, enter into the market in mass swaths, right? You're seeing classically smart money exit the market, and retail dumb money enter into the market at a drastic difference. To what level does that concern you? To what level does the economic uncertainty and global situation posed by the coronavirus pandemic and global lockdowns and everything else that's going on, civil unrest and the rise of populism, among other things, concern you? And obviously, gold, silver, Bitcoin, and I would say the obvious debasement of fiat currencies around the world. To what level does that concern you? And to what level do you believe that is going to incentivize a massive sell-off or a continued rally? So at the end of the day, that's a decision that you have to make. I certainly am playing both sides of this fence with having a dividend stock portfolio. However, significantly increasing my holdings of gold, Bitcoin, and silver, and have been for a while. So, excuse me. All right, so enough about the Dow. Let's talk about the SPY. Again, SPY performing well. I am long on the SPY. I do generally like to take a little bit more risk on the SPY, as I've said for several days now, and will continue to say. I don't really want anything to do with the NASDAQ, the tech-heavy sector. Don't really want anything to do with this. Again, the NASDAQ, we haven't. I would have heard about it. I would have known. We have not broken all-time high yet. It is right there on the, I'm looking at the QQQ, the popular ETF for the NASDAQ, at 237.43, 237.47. So we haven't broken that level yet. Probably will. We're probably going to trade above 237.47. So again, objectively, good profit-taking area. Okay? Like, I am not, if you bought anywhere here, you are at a good profit-taking level. And I don't want to hear you whine if you're like, well, but we went up another 5%. Maybe another 10, 15, 20%. That's fine. To what degree, again, we'll go back to the narrative. To what degree does the upside possibility of profit outweigh the downside possibility of losing your ass, right? Because again, stair steps up, elevator down, as we can see with the market. All right. Enough about the Qs. I am still long on SPLG. Nothing to say. Quite happy about it. I wish I'd have done this yesterday. So I was going to go long on the Sphyxy and on Ziv. And I should have pulled the trigger. Yesterday was a bit calamitous for me, so I didn't have the time to actually open up new positions prior to market bell close. And so these are probably just kind of gone for me, right? These are probably just kind of gone for me, but I did think that shorting VIX was a good potential offside play. Of course, I didn't get to take advantage of this, and I apologize to the premium members for not catching this in time. Hopefully, you guys will be happy with the other work that I did yesterday to benefit the quality of your life. In the realm of commodities, there's quite a lot that I'm looking at. Again, and I just kind of about this. I was going to go long on nickel yesterday, missed my opportunity. So again, caught a lot of opportunities in CFDs and Forex and plotting those and good in crypto. But I'm kind of kicking myself that things came up during my trading period and I was able to manage my open positions, which is critical, but I wasn't able to put on new positions in time too. And I don't trade at market open. I only take positions at market close. So moving on, been doing this for years. It's all right. Time will come again. But nickel was good. I am, however, still long on aluminum, still long on tin. Go, baby, go. PPLT, I was considering as well. It hasn't given the signal that I want to see yet, but the platinum ETF, as well as the palladium ETF, are both interesting to me at these levels. Not really much else to say about that. Let's see here. Yeah. B-Flow, if you're watching, man. What's up, bro? Come at me, man. Tyson Short, all day long. Let's go. I got tired. I hit the red button. So I've been holding this baby open. Let's go. All right. Not much else to say about that. And again, I'm also long. So I have kind of dual exposure long to the SPY because I'm also long the Awanda CFD SPX 500. And the Kiwi dollar continues to perform. I am long on the Canadian yen. Still long in the Canadian yen and the Kiwi dollar. I did take a little bit of profit on both of these yesterday and set a trailing stop loss. So these are just going to run, baby. And we'll go ahead and take a look at our precious metals, of course, real quick. Let's see here. Gold on the daily. Unfortunately, closing and trading below the baseline. Now, if we look at true strength index, of course, true strength is below the signal line. That's bearish, justifies shorts. Time transformation is crossing under. That's a short sell initiation signal. And money flow is on the way down. So again, I personally am patient. I think that, keep this in mind, if gold starts dropping, I would consider it a good move to buy some more. I certainly am going to do so. But as a trader, as far as the CFD markets go, I will speculate on them, right? So, I just saw a comment in there that somebody said, I don't think it's a good idea to short gold or silver. Yes, I agree with you. However, there are, of course, going to be opportunities to short gold and silver, even when you're macro bullish, right? Particularly when the daily is below the baseline, right? We can see some good corrections on gold and silver, which I think generate long-term good buying opportunities. So I just recently accumulated some silver and some gold. This was kind of before the last little bit of price kick up. And I'm going to probably belay gold and silver for the next few weeks and see if we do end up trading lower and taking advantage of lower prices on physical gold, physical silver. Probably good. I think moving forward, I think I have enough paper gold and silver that I'm happy with. I of course, could get more. But I think I'm going to begin more heavily diversifying into the physical. So yeah, wish me luck. All right. So one possible way to trade the money flow index or Chaikin money flow and this smooth dynamic money flow is to look at the angle of the money flow and say, well, it's angling down, so I could take a short, even though it's not below the zero line as a centered oscillator. That's okay. However, in my experience, because you're introducing a level of subjectivity to a technical signal where it's like, what's the difference here? Well, if this line is above zero, I can go long. If it's not above zero, if it's below zero, I cannot go long. And if it's below zero, I can go short. If it's not below zero, I cannot go short. That's very simple. If you start saying well, if it's angled down, I can take the short. You just are introducing something where it's easy to talk yourself into a trade, which is what we're trying to avoid in the first place, right? So for that reason, I will not be shorting gold until I have strong volume confirmation. Let's see here. Same with palladium. Palladium going to be generating not a short signal right now, even though we are going to be trading below the baseline. So we are entering into bearish territory. Having said that, we're not quite there yet with money flow. So I would be waiting for this one patiently as well. Pullback on silver. Silver is quite a ways away from being bearish. Of course, silver, of all the precious metals, I'm probably the most bullish. Well, that's not true. I'm the most bullish on gold, but I think there's the most growth potential in silver. So I'm being pretty aggressive with my silver accumulation. However, nothing bearish about silver here so far, except for, I will point this out, of course. This is the daily chart. We did get a sell signal on time transformation over here, which was a good area to exit, right? This is a nice run up. We can see the buy signal right here and a nice exit signal. It's a beautiful trend following trade from a PTP system. We did get this second leg up. Who cares, right? This is the stuff I'm like, man, you got this beautiful trade here. You got this beautiful trade, almost 12% on silver. And you're like, but I could have gotten another 5. Yeah, you could have, man. Use a trailing stop. Do whatever you do. But you're just, at what point does the upside potential outweigh the downside risk of losing your ass, right? Because you can give back that profit like that. So learning to be conservative, learning to be patient, learning to perfect the setup that you take, and learning that we, as trend following traders, want to eat the body of the trade, right? We don't care about the head. We don't care about the tails, because generally people lose their ass at the head and tails, right? That's the top and the bottom of the market. Screw them. We don't care. Yeah, nothing. I don't see anything negative here on silver. However, there is some regular bearish divergence here indicated by time transformation. We are going to need this candle to close to confirm that. Yeah, to confirm this as a swing high. So let's wait for that and see if we can actually get that regular bearish divergence. As we can see, higher high on the oscillator, or excuse me, high on the oscillator, high on price, higher high in price, lower high on the oscillator. But again, I would not be shorting above the baseline, so I would be predicting, looking at this chart, a pullback potentially of about another 5%. Having said that, I think it is unlikely with gold, palladium, and platinum, as we'll see, starting to move into bearish zones, that silver will be an outlier. possibly. It could possibly, but metals do tend to move together. So I don't see anything to do with silver right now. I think that profit taking, I think that one should most likely be out of their active risk position on silver, and we'll just be patient and wait for the next signal from the market. Platinum as well, bullish, but pulling back to the baseline. No divergence here, actual confirmation from the oscillator. And yeah, just nothing to do on platinum. All right, so that's about all I got on markets today. Let's get into today's cryptocurrency segment and talk about Ethereum 2.0. Let's go. All right, so Ethereum's an ambitious plan to dramatically scale through adopting a proof of stake consensus algorithm and sharding their blockchain appears to be culminating into launch potentially this year in 2020, according to the developers and Vitalik, coming quite soon, actually. Now, one of the leading questions on everyone's mind concerns, well, just how many Ethereum will be locked by users on the network for the purpose of staking and earning annual returns. Now, in this latest Trust Nodes article, they do take a look at new on-chain analytics data, which suggests that nearly 120,000 Ethereum wallets have 32 or greater Ethereum. 32 Ethereum is the amount required to stake on your own outside of a staking pool. Now, the data is derived from Ethereum ETL. Ethereum ETL is an interesting new project. It allows you to export Ethereum blockchain data into a spreadsheet readable form or into other database formats. So here is a little printout. We're not going to zoom in on this too much, but if we take a look at the staking return estimates that were posted by Vitalik Buterin, if these approximately 120,000 wallets have precisely, let's just assume 32 Ethereum each, then many aspiring Ethereum stakers would be very happy to hear that a total of 3.7 million Ethereum would be staked across the network with all of these potential, what's the word I'm looking for here? Wallets that would qualify to stake with the required amount, 32 Ethereum. If they all stake, this would represent quite a lot of staking power and quite a lot of security for the network, which would be a good thing. And this would represent a potential 10% annual return for the stakers, right? About 3.2 Ethereum each. That's a pretty healthy figure, right? So for staking 32 Ethereum, you could predict an annual return of 10%, which is quite good. It's a very healthy figure. However, when this analysis looks at the actual amount of Ethereum held by each wallet containing over 32 Ethereum, again, assuming that they all have just 32 Ethereum, that's fine. But when we look at the wallets that have 32 or greater Ethereum, which is quite a few, it's different, right? So if we look, see here. Yeah. So if we look at the top 10,000 of those 120,000 wallets eligible for staking, they have at least 30 million Ethereum between them, right? Now, while some of these are obviously long-term whales, others are like the Bitfinex cold wallets, right? Like exchange cold wallets. The Bitfinex cold wallet represents 5 million Ethereum on its own. So if we ran with the 30 million Ethereum staked figure, on the other hand, the annual return to stakers would be much, much lower, estimated to be about 3%, right? Now, that's still a reasonably decent return, especially compared to what DeFi protocols on Ethereum are currently offering. For instance, Compound is currently only offering about 0.01% as a rate to lenders because there's far too much lending supply and not enough Ethereum borrowing demand currently on these new experimental platforms, maybe because they keep getting hacked all the time. But part of that is due to what MakerDAI is currently offering DeFi users, because with very little, with little risk, you can get a one-off 50% of your Ethereum holdings in DAI, which you can then use to kind of margin up your Ethereum holdings, all the while hoping, though, that you don't get called to lose it all, because, of course, you can get margin called and lose all your Ethereum. Of course, we've covered unfortunate flash crashes. Now, Because staking on Ethereum is expected to be a lot less risky, because you're, as opposed to DeFi protocols, because your staked balance, for example, with Make or Die or other smart contract programs, are vulnerable to being called based on price, just like if you were trading a derivatives platform, right? So if you were to lock up your Ethereum balance for staking rewards, however, on the new main protocol, base layer protocol, Ethereum new 2.0 environment, that while it would not only be safer than what we currently have with like Make or Die and DeFi, and I would estimate that that has a strong potential to take some of the thunder out of the rapidly growing DeFi industry potentially, right? So many now consider 30 million Ethereum as a reasonable estimate of how much Ethereum we can expect to be staked on Ethereum's future proof of stake network. But of course, there's a lot of speculation that initially, at least, far less will be committed. And certainly it would be like, this is, hey guys, you've been mining this for years and years and years, and this has made a lot of you millionaires and a lot of you are rich, and you're just holding on to these, holdings. That is your wealth. Like, this is it. You were computer nerds before and you believed in Ethereum and now you're super millionaires. But we're doing this new staking thing and we're going to need you to go ahead and lock that all up and put it at risk. Right, because when you stake, right, if you cheat, you lose your Ethereum. Right? That's how staking works. Ethereum gets burnt. Because of course, there's going to be a period of turbulence with this network transition, right? And Ethereum holders are not most likely going to feel comfortable just staking large amounts of their capital in Ethereum right out of the gate, right? We want to see the 2.0 dust settle. We want to see the network prove that it's robust and functional. And this is likely going to mean that the earliest stakers are going to collect larger returns in the early months or years of the new network, as it always is, right? Early adopters receive larger returns, high risk, high reward. Now, furthermore, how many users will stake and how much of their balance they will do so with is probably going to depend on price action at the time as well. Of course, the economic realities of price do come into play at all times. So therefore, staking may become another price indicator for Ethereum, right? As the minimum 32 Ethereum may not be necessary for participation as a staker, because staking pools and staking service providers are, of course, going to enter into the scene, right? This is going to add another dynamic to networks, to the network staking formula, right? For example, if you look at some of Satoshi's later writings, one of the things that he says that he didn't predict was mining pools, right? And their influence on the network. So when we're talking about a proof of stake chain, staking pools are no different. For those of you who are not aware, if you want to stake on your own and run your own node and stake Ethereum, you need to have 32 Ethereum. But there's going to be staking pools. Consider them a website that you go to, and they're going to give you an Ethereum deposit address, and you're going to deposit your Ethereum in there. And your Ethereum is going to be lumped in with a ton of other depositors' Ethereum to stake. And the rewards are going to be distributed based on weight to the pool participants, right? Consider it like community socialism, with the risk of losing your funds if you sign up with an illegitimate company. Kind of like dealing with the government. But with 32 Ethereum being required to earn solo staking rewards, and looking at that number of addresses that have 32 Ethereum or more, of those addresses, like the amount of Ethereum that they're utilizing to stake could, I think, be an interesting indication of the level, not only of potentially a price indicator, a price level indicator or a price action indicator, but also of the level of decentralization, given the context of this new proof of stake model. We can really see how centralized or decentralized the staking is, right? Because if we look at the network's current metrics, we see that there are currently more than 530,000 active Ethereum addresses. This means that active addresses means addresses that have engaged in some transactions in the past 24 hours. So again, pretty active network, right? And that's at a yearly high. And Ethereum continues to show, or investors continue to show, increased activity in Ethereum, right? And we can infer from this increased demand. Obviously, we can see that with the price as well. Now, the network contains over 100 million different distinct Ethereum addresses, right? And of that number, those 120,000 addresses means just 0.1% of the network's wallets are eligible for solo staking. So, millions of wallets on the Ethereum network, only 120,000 are eligible for solo staking, 0.1%, right? Live I've 1 second, guys. Sorry. So, if price increases if Ethereum is more expensive, then even less people will be able to afford to buy enough Ethereum to accumulate, to put in their wallet, to be able to do solo staking, right? So a delicate balance is going to need to be struck between not wanting to have staking concentrated on exchanges or in these very few large centralized wallets, while kind of suppressing the price, honestly, right? Because we want as much participation on the validation front as possible. And this is, this right here, this is kind of an economic argument that's made against Ethereum, right? And not against Ethereum, but against staking in general, right? Like, well, it seems like if you want to decentralize if you need individuals to stake their assets to secure the network, and you want to decentralize this process, then you cannot have the cost of accumulating the underlying asset prohibitively high. But there's that runs against the narrative of buy crypto, make money, because they just want the number to go up exponentially. So you have kind of you have an incentive to suppress price almost, right? Which opens up the market for kind of bad things for retail investors, right? Now, the resources required to stake are going to dramatically depend on price, of course, because of this. Because, like I said, if Ethereum was at $1,000, a solo staker is going to need $32,000 to accumulate enough Ethereum in order to solo stake, right? At $10,000 price levels, which some Ethereum bulls insist is in the cards for Ethereum to eventually reach, that means you would need 320,000 American dollars to accumulate enough Ethereum. Now, of course, you can make the argument, well, they can just buy it while it's cheap. That's true, but again, we just talked about this dynamic. You are kind of requiring that the network only be readily available to be decentralized enough in the staking for those who are actively participating now, which is not a large number, right? If you really want Ethereum to be large and robust and really decentralized in the staking process, like, how are you going to, like, what marketing campaign, what justification, what argument can you make to say that, well, the price of Ethereum, it's going to be 10,000, right? And you're saying that if one Ether is $10,000, you can create a decentralized environment at that price level. You can't. It is not like the higher price goes, in my argument, with staking, the more centralized the network is going to become, right? Unfortunately, right? Unless you manipulate the market and suppress price. So, yeah, we can get into that in a little bit. This is why I'm a Bitcoiner. But again, giving Ethereum its due, I hold Ethereum. I'm going to be participating in this experiment because I'm going to see how it goes. Now, this just highlights how high Ethereum's aspirations are, and that they are, because this is their goal, they are, they do have these aspirations of decentralization, right? But, relative to Bitcoin, like this is, this is similar to, here's the difference, right? You can relate this to mining because, of course, solo mining is not realistically possible at all unless you're putting in tens or even hundreds of millions of dollars into your own ASIC farming operation, right? You can, of course, pool mine and all that kind of stuff, but generally, most individuals don't do that. That's gone the way of the dinosaur. However, right, Bitcoin mining is not the only thing that decentralizes the network, right? You have the developers and you have the node operators who help to make the final decision, right? So even, and the network can also be, because the Bitcoin network can also be secured at a significantly lower hash rate. Kind of went over this the other day. Like the levels on the current hash rate that we currently have on Bitcoin, we could safely say like ludicrously safe, right? Like we just want 1,000,000,000 to 1 odds that we don't get any kind of BS, right? So this, kind of the barrier to solo mining is currently with Ethereum, right? Much lower. Kind of if you consider Ethereum mining, like the barrier to entry to mine Ethereum is lower than Bitcoin, drastically so because of the price, right? And attempts to address this is, obviously this is an attempt to address one aspect of the aspirations of decentralization, right? However, okay, this is also another difference. With Bitcoin and Bitcoin mining pools and miners do not have direct influence over exchanges and vice versa, right? While you can make any argument that you want here, but let's just talk about facts. While with staking, exchanges okay, so in Bitcoin, if you're an exchange, right, the argument here is that Bitcoin mining does not influence the exchanges for the purposes of price or for price manipulation. Because if a Bitcoin exchange and a miner certainly can collude, but if a exchange wants to utilize mining to manipulate the network on their own, they're going to have to invest tens of millions or hundreds of millions of dollars into building their own mining operation. With staking, exchanges already have access to huge wallets containing so much Ethereum, millions of Ethereum. And they're going to be likely offering staking pools of their own to their own users. So exchanges are already set up to do this with staking as opposed to mining, right? So we're going to see a big dynamic shift with the power of exchanges relative to Ethereum when they switch to Ethereum 2.0 is my contention here, right? So this potentially creates other conflicts network-wide, such as when governance decisions are being made, for instance, right? So however, on the other hand, many do expect Ethereum owners will be able to move from exchange to exchange for purposes of staking. So that is a valid argument on the decentralization aspect. But again, in my experience, arguments that, well, the user can do this generally falls flat. The way that things are set up by default, like 90 to 95% of people like just run anything that they receive on the default settings and don't take the work to educate themselves and figure out how to set it up themselves, right? And this is like literally everything. So saying that, well, Ethereum users will have the power to move around from exchanges, they feel that exchanges are utilizing their influence of large staking wallets in a negative way. I don't think it's really realistic. You're putting the burden on the retail user, and it is not the retail user. It is not the individual's problem to solve the systemic issues of the network, right? Like that. Even though I lean toward the right, that is one of my that is something, for example, that I agree with Eric Weinstein on when he's talking about some of the rhetoric coming out of the personal responsibility, which I'm huge on, right? But some of those, some of the like, oh, if you're just like totally on top of it, like you just crush life, like there's nothing standing in your way. I don't believe in that. There are impediments, and it's not the burden of the individual to take on solving systemic issues, right? There are systemic issues and there are individual issues. One thing that I focus on is if you haven't done the work on yourself, then you don't really have a right to complain that there are systemic issues, because there are systemic issues, but you are also throwing in the towel, right? Like you can't just sit around and say, hey man, like the government and like oppression and inequality, and like not take it upon yourself to optimize your life. Like you do have to be a hard worker. You do have to take it upon yourself to educate yourself and work hard and research and set yourself up. You have to put yourself in a position to succeed, right? And once you're at that level, guess what? You actually now have access or a good chance to actually help be useful in tackling the systemic issues, right? Otherwise, you're just kind of like a flag-waving hippie. Moving on. There's also expected to be non-exchange staking pools, right? As well as more specialized and exclusive staking pools, and some even anticipate decentralized staking pools to be developed someday. So potential technological solutions to all this, but again, still there is this sort of Damocles that hangs over this whole article, which is, if we talk about this kind of centralization of staking in the hands of exchanges. So with Ethereum 2.0, the developer's vision is to find a way to meet a threshold of decentralization, as well as provide returns on your Ethereum asset holdings, all while securing the network using what they consider to be a more efficient proof of stake model. But trade-offs are going to have to be made in the overall security and game theory powering the network, relative to the proof of work model of Ethereum 1.0 that they copied from Bitcoin. Again, Bitcoin doesn't have to worry about these problems because we're not going to move to proof of stake, because proof of work is better, because we do not, you have to look at Bitcoin's goals, like security and game theory, right? We're not going to sacrifice those. We're not. Like, we'll use the energy. It's worth it. Like, we're going to secure this network and create robust incentive models. Ethereum is playing at that, potentially to their detriment, but we'll see if it works out. I'm going to support them in this because we don't know, and I'm open to seeing what works. Now, this does lead naturally into the next back half of this and kind of our next story overall. Come on, man. You just get there we go. So this takes us to the next story, where certain critics are pointing out supposed fatal flaws in the proposed rollout of Ethereum 2.0. So as we just discussed, Ethereum 2.0 represents a fundamental change to how the network is currently operating as a proof of work model, meaning participation in validating and mining transactions relies not on how much Ethereum you have, but on computer processing power, right? And in a proof of stake model, network participants lock up collateral for the privilege of validating blocks on the network, right? They stake their capital, right? And it can be taken, right? In this case, that collateral is going to be ETH tokens, right? And if the user that's staking operates honestly and in good faith, they will be rewarded with freshly staked, mined Ethereum, freshly minted Ethereum, right? Now, if you stake your Ethereum and you are a bad actor, right? If you stake for the purposes of committing fraudulent or disruptive actions on the network that go against consensus rules, then they forfeit their staked balance and it gets burnt. Now, kind of I guess the goal here, right? We already talked about this, right? Is trying to achieve, similar security goals, but with a different approach, right? So with Ethereum 2.0, in order to attack the network, you're still going to be required to spend valuable resources. But unlike attacking a proof of work chain, which requires attackers to consume precious electricity and get access to dedicated hardware, proof of stake would require attackers to burn up their valuable Ethereum balance instead. And this is a computer security issue, right? Like, for example, it is very difficult to steal a mining farm, okay? Like, you have to physically do that. And there's people with guns, generally, if they're smart. It's far easier to steal Ethereum, right? Like, so for example, right? Like, we've seen massive amounts of Ethereum and crypto stolen from exchanges, right? Exchange hacks are a thing, right? That's a point of failure. So if a massive exchange was to get hacked and these individuals got hold of a ton of free Ethereum, it's not going to cost them a whole lot to put that at risk or burn it up. There are some people out there who just want to see the world burn, right? So it's probably best to set as few opportunities for them up as possible, right? So for the network participants who operate honestly in validation, they're rewarded with Ethereum. And as we discussed earlier, the reward is relative to both the size of their investment as well as the number of other users staking on the network, right? It's the amount of Ethereum that you are staking, the amount that you're invested in staking, and the total amount of Ethereum that's staked on the network. So again, users who stake a minimum of 32 Ethereum are going to be eligible to do solo mining on the new network, which includes the ability to participate in voting on major governance decisions within the new ecosystem. But hey, like the Ethereum Foundation does have a track record of rolling back the chain when they want to. But the advantages of proof of stake would include less computational and energy use, right? As well as this different sort of security model to ward off hackers and malicious actors. So again, it is from a power consumption mode, more efficient, more economical, right? And unfortunately, you get a lot of individuals who have fallen kind of for the sway that resource consumption is this massive issue that we need to deal with, and that electricity consumption is evil. They say that Ethereum, Bitcoin is so bad because it takes up so much electricity. No, it's good that we are required to expend precious resources to secure a global financial network. That's a trade-off. It's not cool that you guys just get to print money and require no skin in the game. Like, it doesn't cost you anything to print a button, Federal Reserve Bank, and print millions of dollars. Like, we have to spend valuable resources that affect us and the planet to secure our financial network. And I think that is worth it and a good argument, right? But getting back to Ethereum, of course, there's a lot of questions about this Ethereum 2.0 implementation. And I want to take a look at this recent Twitter spat between Ethereum co-founder Vitalik and the CTO of Scale Labs, Konstantin Kladko. He alleges that Ethereum 2.0 has fatal flaws that will prevent it from ever getting off the ground. So taking a look at Konstantin's first tweet here that kind of started this brew storm, he says, unfortunately, there are fatal flaws in the way ETH2 staking ended up implemented. When staking starts, it is going to be a huge embarrassment because there may not be enough money to start the network, #DeFi. Now, so obviously his argument centers around what's called the one-way bridge concept that exists within the plan and this is to migrate the existing Ethereum blockchain the proof of work chain over to the Ethereum 2.0 chain, right? Users who wish to participate in staking for the latest blockchain solution will not be able to do so using fiat or other cryptocurrencies, right? Like, remember that this is a hard fork, right? This is what is currently considered the ETH token is not going to be anymore, right? It's going to be a new one, just like, you know, Bitcoin Cash tried to do unsuccessfully. Haha. Instead, they're going to have to stake a minimum of 32 Ethereum. So again, people, this is like dangerous, right? This is like a new thing. This is like saying like, hey, bro, you know all that Apple stock that you've been holding for 20 years? We're just going to need you to put that in this box here. We're going to light the box on fire. And what's going to come out of that fire is magically new stock. It's not going to be the Apple stock you knew, but it might just be the Apple stock you deserve. So again, individuals right now on the Ethereum main chain, which we know has value, are going to have to choose to stake their current 32 Ethereum, which will then be converted into new ETH2 tokens, right? And essentially burnt, right? Now, Constantine is pointing out that this transaction can only happen in one direction, right? Once you have converted your ETH tokens into ETH2 for the purposes of staking, you are not going to be able to change them back for ETH tokens unless, again, as I said, they kind of have a track record of, they want to roll back the main chain. So if this huge, but just imagine that, like, oh man, if this doesn't work, if there's a huge embarrassment, if there's millions of Ethereum staked for Ethereum 2 tokens and it turns out to be a flop, they're going to have to roll back the entire chain and print money, right? Embarrassing. Again, further tweet from Constantine. He says, thank you for the question. Here it is. When you stake ETH1, you actually destroy it, and there's no way to get it back. ETH2 is a separate currency, since there is no way to convert ETH2 to ETH1. If, say, ETH2 equals 0.5 ETH1, you immediately lose 50% of money when you stake. So, I mean, you are asking individuals to take something that has current monetary value right now that they could sell into cash and buy houses with and live their lives, and trade that in for a speculative new token, right? Which we only hope will have the same robustness as the previous one, right? And this is why Bitcoin will never be hard forked, right? This is like this is why the Bitcoin network, those who are concerned about its security and robustness, understand that we are not going to go through this. Bitcoin is too important. We're not going to do any hard forking. We're only going to soft fork fixes in. And that is harder to do. It is easy to hard fork a coin. I can do it right now, and I can't even write Python, right? Let alone C++. So certainly not Satoshi here. But it's easy to hard fork any cryptocurrency, right? It's mostly all open source code. Just copy the repo, boom, change a few things, off you go. To figure out how to implement a soft fork into currently existing code is far more difficult and requires far more intelligence, consensus from developers, work from developers, and eloquent solutions and ideas. This is why those who develop on blockchain Bitcoin Core are the most talented developers. And those who develop on Bitcoin Cash and Bitcoin SV are the guys who went to community college and they did okay. But, oh man, it's fucking Ted again, man. I can't stand Ted, dude. He's always coming around here with my point here. So according to analysis from the website stakingrewards.com, they remind users that your hard-earned Ethereum is going to be exposed to a certain level of risk on the new platform. Some of the risks include, let's see here. Here we go. Some of the risks include, first, you could immediately lose money based on the conversion from Ethereum 1 to Ethereum 2. If the market valuates the new Ethereum 2 at a different price, it could be potentially a costly conversion, like immediate price change. It's like it's like if you were to just, it would be if you atomic swapped all your Bitcoin right now into XRP at current valuations. Not selling your Bitcoin for XRP, but you atomic swap the quantity of Bitcoin that you have into the same quantity of XRP. If you just imagine that, yes, you would want to jump out a window too. The second risk is that your staked Ethereum does not provide any guarantee of a profitable return. You may still be subject to the value of ETH2 dropping below your original investment, or you may be faced with a penalty for not effectively fulfilling your role as an ETH 2.0 validator, in which case you lose your money as well. Third, Ethereum 2 is going to be a brand new crypto token. So users will not be able to initially trade their ETH2. So this is going to mean not only a delay to cash out, but a delay to receive any rewards earned from staking that would be very helpful to kind of mitigate the financial cost of this, right? Now, while all of the current Ethereum tokens are eventually planned to transfer into Ethereum 2, this is not going to happen immediately and may take quite some time. Indeed, this might take years, and this will all rely on how successfully the new proof of stake system launches, right? And if there is catastrophic failure of the new network, this is probably going to result in your Ethereum being locked up that you traded in for ETH2 on a worthless currency, on a worthless chain with no way of getting it out, right? So if the Ethereum community is hesitant about investing their Ethereum into the new 2.0 scheme, this new budding blockchain may find itself short of the required funds to launch successfully, which is what Constantine is attempting to point out here, right? That is going to be, if people are skittish about this, then this is going to be potentially embarrassing or fatal for the rollout. Now, you can make the argument here. I'd like to point out that, well, maybe the big wigs, the big Ethereum developers, Vitalik himself could come forward and do it himself, right? But then you're like really bringing up decentralization issues, right? Like this is again kind of getting back to the dynamics that we saw in Bitcoin and Bitcoin Cash. It's what the community chooses. It's not what an individual developer or small group of individuals wants to push. So looking at this last tweet, and then we'll wrap this up, Vitalik was nevertheless bullish in his response to all of this, right? Pointing out that users who are already signed up are well aware of the risks, right? And that the risks associated with investing significant capital into a new crypto venture is well known by most crypto participants today, right? He says, quote, "I think everyone looking to stake already knows that they are taking a bet that the transition will successfully complete. We fully expect fewer stakers at the beginning, and they will get a return commensurate with this higher risk," right? Now, some feel that this demonstrates that these crypto startups, of course, often rely on people joining who don't fully understand the risks or the complex system that underpins such projects. But yes, please come on in here because we certainly need your money. No, don't worry. We totally got you. Just to make sure, just sign this paper real quick that says you could lose all your money. No, you don't really understand. We're telling you everything's all good, man. No worries, bro. This happens a lot, right? I mean, I don't go to a Bitcoin conference, go to like an altcoin conference, right? Like go to a blockchain startup conference. Like I love San Francisco Blockchain Week, but it's a blockchain startup conference, right? You see this. You see great people there, like very, very smart people, but you see this as well. Now, this discussion emphasizes the open and collaborative nature of the cryptocurrency industry. And it's expected, it's hoped, I guess I should say, that Vitalik will clarify these important questions in the coming weeks and months ahead of launch. However, having said that, no gods or kings, only men. Vitalik doesn't have all the answers, right? He's not the god and savior of the Ethereum network, right? Like people just look at him like he's this magical unicorn. And I have a lot of respect for Vitalik, smart dude. But these are not questions to be answered, right? These are valid risks. This is the way that it is. These are valid concerns to have. And at the end of the day, it's the individual who has to decide, well, okay, I'm going to support the new network and I'm going to roll with this and I'm going to put my capital at risk. But I don't want this to come off as like Ethereum FUD. I'm certain that it could be. I want to give you guys the facts. The reality is that this is a type of thing that, as I said, that Bitcoin said, no, we're not doing anything like this because it's dangerous. We're not doing this like at all. No discussion, none, shut down. Like, because what kind of big blockers are asking for, like, you don't understand the risk that it poses. And we're just not going to do it. And if you don't like that, fuck off and fork off. And they did. And I kind of not worth a whole lot now. But as I said, we here at Cracking Cryptocurrency, I myself personally, I'm going to be staking Ethereum, right? I'm going to take a shot at it, right? I support nascent technology. I support Ethereum. I think it's a cool concept. Ethereum does not require, because my estimation is that Ethereum is not going to be sound money. Ethereum is, it's a platform to be the smart computer of the world, right? And I support that, right? Cool. Smart contracts are awesome. They solve a lot of things, I think that, the Bitcoin protocol will end up taking care of all this with secondary layers eventually. However, I certainly respect Ethereum's desire to go out and try. And again, Ethereum's been a good, I trade Ethereum all the time. It's been a good investment for me, obviously, looking back on my life, right? And they've got brilliant developers at Ethereum, right? I disagree with some of the decisions that they've made on a moral basis. I completely disagree with what they did with the DAO hack, rolling back the chain. However, we're free to disagree on that. At the end of the day, I just don't want individuals who are only getting information from Ethereum sources to, go into this not understanding the risks. Like, these are valid concerns and risks, and it doesn't matter. Like, this is how it's going to be, right? There's not going to be any, the only thing that they could do, right? And this would be controversial too, is maybe they could put like in a backdoor, right? Which says, okay, well, you're going to stake the 32 Ethereum, get the 32 Ethereum on the ETH2 chain, and no, there's not a good way to do it. You'd have to oracleize the chains. You'd have to have an Oracle, Chainlink, I'm looking at you. You'd have to Oracle ETH2 and ETH1. They'd have to be able to communicate, and you would have to basically say, there'd have to be some impetus, like some, again, I'm not a developer, so this all kind of makes theoretical sense, but I'm certain that there's reasons that they haven't done this, right? Like, because again, I'm just thinking in my head, it's complicated and complicated. Like, there's all ways that this could lead to security flaws. The base concept is like, there should be a way where the individual staking the 32 Ethereum, should the network fail, can get their 32 Ethereum back, no harm, no foul, right? It's bad publicity. The Ethereum network takes a dive, or it's at least its Moody's rating takes a dive, but individuals don't have to be at the risk of losing all their money. But I feel like to do that, you'd either have to require a centralized command and control function from the Ethereum Foundation, which we're against, or you'd have to oracleize the chains. So I don't see how that's possible. So again, just be aware. Just be aware. And could be absolutely awesome. Maybe in a year, we'll be like, man, remember when we were a little worried about going to Ethereum 2.0? Haha, it's totally awesome now. But maybe not, right? Again, I'm not, I believe that proof of stake is cool, but I don't agree with it for Bitcoin, obviously. Maybe it'll work for Ethereum. Maybe it won't. I don't know. I just don't have rose-tinted glasses on about this. Could be cool, could be bad. We have no idea. But we here at Cracking Cryptocurrency are going to be paying very, very close attention to this and to the rollout of Ethereum 2.0. And as I said, we will be personally detailing all the developments and processes of staking, because we are going to be personally staking once that time comes. So I'll give you guys an insight into the main vein. Any comments, questions, concerns, sarcastic remarks, or death threats about what we just covered, you could please kindly leave in the comment section down below here on YouTube. We'll do our best to get back to you. And I'm going to bring the guys on now so we can have a little bit of a chat about this and answer your questions for a few minutes before we get to the community mentoring session, which is in about 30 minutes. So give me a moment to get the guys on and we'll get rolling. All right, and we're back and live with Mr. Crypto Jack, Junior Analyst Jason, and Senior Analyst Alex. Let me yes, on this glorious hump day. How are we doing today, guys?
Pretty good. Alive and well here in Los Angeles exclusion zone.
Still got your windows?
Yeah, what's it like on the ground down there, man?
It is actually much better today. My understanding is that while they did arrest a lot of people for breaking curfew last night, there weren't any looters who were arrested. So the actual destruction has calmed down, and now the oppression has begun. So I guess that's how I would classify it. So yeah, just people being arrested for violating curfew, which is a crime, I guess, because the government told you to.
So.
Yeah. The oppression has begun.
Yeah.
Dark days. On another note.
Yeah, I mean, unfortunately, right? If you want to like get in like deep into this, right? There are a lot of signs of people like really undermine it. And again, I'm pretty happy American. We're pretty proud American, I should say. Anyways, I'm pretty proud of our country. But having said that, I'm also not a dummy, and I do my research, and I've studied history, and there are a lot of dangerous signs. Now, I think that there is a point here to not directly compare like the state of the world right now with the state of the world prior, because things are so different with technology and the internet, and the way that the way that we just currently have everything set up. But to say that there aren't valuable lessons, and that every time we've started to see these signs in previous large nations, it has been like, it's been a sign of the end, right? And again, everybody thinks that, and they're like, oh, I need to go sell everything. Everything's going to end. Like, no, like it might take 20, 50, 100, 200 years, but it's just a sign, right? That things, that all is not well in paradise anymore, right? And this is, there's a wide range: suppression of the media, direct political influencing the media, general lack of opportunity or enthusiasm or patriotism from the body populace, lack of participation in politics, over centralization of power, punitive legislation or punitive commands, or totalitarianism, or police stating, or unreasonable searches and seizures, confiscation of weapons. All of these things occur in late stage nations. There's a lot of good informations about this. You had sent me that tweet earlier, but I was actually reading that the fourth turning, and I saw it referenced in that tweet thread, which was pretty cool.
Did you pull up earlier in the week that what is it, the seven steps in the life cycle of an empire was, with currency based debasement being one of the steps? Am I remembering you pulling that up, or is that something we looked at offline?
That was over the Mike Maloney.
Yeah, I don't recall that. I don't think I was there, man.
The 7 states of empire.
Oh, okay. Well, pull it up, Johnny.
Jamie, pull that up. All right, hold on. What do we got? Is this Mike Maloney?
Well, I've heard it stated by Mike.
7 stages of empire.
I don't know if it's specifically his.
Hidden secrets of money. This is actually like really good stuff, man.
All of that series, I would suggest. One of the guys in the premium group had turned me on to that, and then I watched it. It's actually really good stuff. It puts it into words that's very easy for most people to understand.
Yeah, this is episode 2 of Hidden Secrets of Money, the 7 Stages of Empire. Yeah, this is really good stuff. Yeah, so we start off, the 7 stages are sound money. Country starts out with solid money of well-defined value, usually either gold or silver, or a proxy backed by thereof. Public works. As the country develops, its government begins to build out infrastructure. Massive military. As economic affluence grows, so does government's political influence and aspirations, and it increases expenditures to fund a massive military. Perpetual war. Then debasement of the currency supply, loss of faith, and currency crisis. Yeah.
And that
well, hell, that's like the last. Forget an entire empire. That's just like the last 50 years.
Well, that's the thing. Those 7 stages, if you look over the course of history, it's about every 50 years that cycle completes.
Oh my God.
And then we go back to sound money. And this is the first time in history that there's ever been any type of sound money or anything.
Bitcoin fixes this.
Like Bitcoin, yes. Otherwise, it would be gold and silver. So it's the first time that there's ever been another option besides gold and silver, which I think is very interesting.
All right.
You know, in the future, they will have to confiscate people's Bitcoin the way they confiscated people's gold if they want to go back to unsound money.
Yeah, which is, come get it.
I mean, listen, it's not impossible, right? Like, we talked about the $5 wrench attack. If anybody could pull that off in mass, it's a military, right?
Yeah, if the government came to your house with a gun and they're like, "We need your private key," it's like, okay, hold on, let me go grab that for you.
Yeah.
Just 1 second.
Yeah, most people certainly, yeah.
Yeah, exactly. I mean, if it's like, you kill my children or you get my private key, it's like, okay, well, you get my private key. I guess the government wins this one, like they usually do.
Not your kids, not your keys.
Wow.
Wow.
Don Camden had asked me to look at Bitcoin on the monthly.
Yeah, we do have some questions as well.
Yeah, we got to do kind of lightning round because I need a little bit of time before the community mentoring session. But BTC USD on the monthly, I don't really have much to say here. Again, I've obviously pulled up this chart a whole bunch, and I don't have much to say that would be more illuminating than what we can see based on the trend that's, I think, identified by the daily. I certainly don't think there's enough data here, data being defined as data points. So if we consider each candlestick as a data point, I don't think, looking at the monthly chart, there's just a lot of data here, data points to make sound decisions out of. So that means that because indicators are not going to be very helpful on this time frame, because indicators are more accurate, the more data points that they have to calculate from, to do their algorithm on. So really all we can determine from the monthly chart is the color of the candlesticks, or candlestick analysis, Japanese candlestick analysis, or maybe price levels, right? Maybe trend lines. But again, I think that trend lines play out better on the daily and the weekly. Having said that, so I don't really, I don't got much, man. I don't got much. I don't know what people, certainly, please tell me what, I get this question all the time, like, look at the monthly. Well, I'm not looking at anything on the monthly. So maybe you tell me what you're looking at and I'll tell you what I see, right? Because, I got nothing.
I think most of the time when people do that, they're like, what assumptions are you making about this? It's had three green candles. It's got to be a red one, right? It's kind of like,
right,
when people look at the monthly, it reminds me of people like looking at the roulette table and seeing that it's all blacks. It's got to be red now.
right.
Like that's kind of what you're doing there. Because I mean, there are some ways to like trade the monthly. I mean, that I'm sure there's lots of people out there that have great results, but it just seems like one of those things, like the tea leaf type thing, just like, this has to do this.
Well, yeah. So, if I were to make, if I just had access to this chart and I was asked to make some form of financial decision, I would most likely sell, right? Like I said, I can just look back and see that, hey, over the last 2 years, this has been a pretty good area to sell, right? Might go up to 14,000, might go around to 12,500, but like certainly around the $10,000 area, like, you're getting a pretty good price, right? You can try to optimize that as much as you want to your expense, right? And then I would say, okay, well, look, if we close a pretty nice monthly candle above this range, like above 10,000, well, hell, we've never really done that. We haven't done that since 2017. We might just get on up there then if we get above here on a monthly basis. That's what I'd be watching for. I think that's what a lot of people are watching for, to see a monthly or weekly candle close above 10,000, right? Or, or a horizontal level close to there, or the volume profile level right at 10,200, or the trend line at 10,300, right? Like, you insert whatever technical analysis chart pattern flavor fits your bias here, or fits your fancy. But again, the kind of outcome is the same, right? Seeing higher time frame confirmation, strong candle body close, good volume above a level of resistance, classic, good indication of a real breakout of resistance. Let's see here.
Because you just kind of have to make those wider generalizations when you're looking at that wide of a data set.
Don Camden says, so the 1 minute chart is best because it has the most data. Body candle closes, higher highs, lower lows, etc. So I would argue that yes, the 1 second chart has the most data. and therefore the most noise. You want to find a nice balance because we're humans, right? So we fall fairly short of a computer's ability to process data. But of course, a computer algorithm can only process data the way that we tell it to and filter out what we would consider noise as efficiently as we do it. So you kind of have this interplay of man and machine. However, I won't argue that. Just look at what look at what massive financial players do. Like, do you think that Goldman Sachs is sitting there swing trading like me? No, because they have greater access to technology. I don't. I'm able to extract profit from the market, which is most people find fairly difficult to do. Again, the failure rate on traders is high. I think I've identified a process that allows me to do that. And that's by knowing my place, honestly, right? Like I stay in my lane. I'm very good on a certain time frame with a certain amount of data at a certain level of sensitivity, and I can filter out noise to a certain degree to make actionable trade decisions. I can't watch the 1 second chart as a human and make good trading decisions. Like I can't. I don't think anybody can. There's some people who say they can, just like I don't scalp on the lower time frames. I'm not very good at it, right? I mean, I'm certain if I applied myself, but I don't want to do that. There's a lot of other things that I want to do. Like I write and I read and I'm a father and I like to hike and do stuff and start up other businesses, you know? So yeah, I don't find a huge desire to do that. But look at what, like I said, institutions are doing. They run high frequency trading algorithms and bots that monitor like the real-time data down to the second, microsecond. They transact at the microsecond. So yeah, you're right, man. Like the more data points that you have, the faster you can act, the more data you can react. The problem is, for a human, right, access to more data does not always mean better results, because with the more data comes more noise, and unless you can filter out that noise effectively, your decisions are going to be impaired, which is why I think that humans are better suited to the daily meso time frames and staying off anything with an M after it, unless that M is the monthly, which, as I already said, isn't a very interesting chart. Good question, though, man. Thought Don Cannon was going to slink away to yell at me in the members lounge.
Oh, he still will.
Probably.
Mm-hmm.
Let's see here. I don't want to do any chart requests today, except for I guess BTC USD. I just did a chart request. Actually, I don't mind. Let's do these real quick, and then yeah, we probably gotta go. Mac W wants to look at Tezos. Let's look at Tezos.
For anyone who has access to the bottom feeder strategy out there in the premium group, check out XTZ on different lengths. It does very well with the bottom feeder.
Tezos USDT, I could see a continuation trade here to the upside. And same with Tezos Bitcoin. Tezos Bitcoin actually looks pretty good here.
Still hanging out over resistance. Hasn't really dipped a lot.
Yep. And it's below the qualifying line. Yeah, this looks pretty good. Looks pretty good classically as well. Both of them, actually, Tezos does look pretty good, not gonna lie. And only one potato asks, can you check out, I don't know who struck this through. Must be struck through on the main tab. These have been struck out for a while. No, it's struck out over here. Ah, here we go. I got it. Statera.
But I couldn't even find it.
Isn't that like isn't Statera like a psycho pill or something? Like an antipsychotic or antidepressant or something?
Statera? No, that's Statera is an ADHD medication for adults. It's a non-stimulant ADHD medication.
So it's like Ritalin without the riddle.
Yes, exactly.
Gotcha. All right, let's go to Coin Paprika.
Sounds terrible.
Sounds terrible, man. You gotta only if I'm gonna have Ritalin, I want that RIT, man.
You can't get rid of me.
Chase is like, I need that ADHD in my life.
Yeah.
It's medication. That sounds terrible.
Statera.
I couldn't even find anything on it.
I got nothing. Hold on.
He was excited about it.
Or he was paid to shill it.
Well, he didn't do an amazing job.
Okay, maybe I apologize. Statera in Latin means balance. STA is a trustless smart contract deflationary token within a portfolio of selective coins built on the Ethereum blockchain. The index portfolio contains wrapped Ethereum, wrapped Bitcoin, Lynx, SNX, and STA. Here we go. Sounds like a pyramid scheme.
Of course. A pyramid scheme with balance.
It's not even on Coin Paprika, man. Come on, bro. What is this? It's crypto. Man, what's that URL again? Crypto coin trader.
CoinGecko.
Man. I can't think of the link off the top of my head right now. My other
Oh, are you talking about the non-trading view chart one?
Yeah. It's like coin. It was something I can't remember now, but they changed it and I have it bookmarked somewhere. But I gotta find it.
This is nature's way of
Sure.
telling you.
Yeah, here it is. No, I found it.
Were you about to say this is nature's way of telling you it's a shit coin?
Yeah. If you're not sure, it's like, is this a shitcoin? If you can't find out where to buy it, then it's a shitcoin, dude.
If you're working harder on finding it than they worked on the white paper.
Let's actually look for STAF, right? Man, it's not even on. It's not nowhere, man.
Is it on Uniswap?
It's called Stable, right?
Statera? STA?
Are we sure we're not getting trolled? Who asked about this coin?
I found that it does exist. It's on CoinMarketCap. It's on CoinGecko. Here's the Ethereum address, but I don't see any markets where this thing's traded. I think I have to swap, select a token. Heck no, this thing ain't on Uniswap. Uniswap's like, we don't mess with STA.
It's native to Waves, isn't it? You have to look at it, Waves.
Man,
It's an Ethereum.
It's
Yes, it is. This is an Ethereum address, sir. Got the contract address right here. Now I'll pull it up on Etherscan.io. Boom. Contract.
I feel like our time would be better spent talking about Bitcoin SV.
Moving on.
Well, that was fun.
That was cool. If human traders don't always benefit from more information, couldn't you say the same about using too many indicators? Not a critique or anything. No, yeah, I would certainly not take that as a critique. I mean, you're talking my language. Do you have any idea how many people I meet, or kind of novice traders that I meet that have like over 10 indicators on their chart? Like, this is very, very common. And I'm like, okay, just explain to me one more time why you have all these indicators on your chart. And peanuts, when the teacher speaks, like, wah, like, invariably, this is what I hear coming out of their mouths, right? Because it's always some form of, well, it depends on how I feel. Like, always, right? If you have more than 10 indicators on your chart, no, dude, you do not have an objective trading system. That is way too many moving parts, way too much that can go wrong. And what you're really doing is you're a novice and you have seen this indicator on, some YouTube video or on a chart somewhere, and you looked at it for a little bit and you're like, this is really cool, so I'll put that on my chart. And then you're lazy, so you don't actually build a strategy around it and learn how to trim the fat. And then that just keeps happening because you don't have good results. So then you just kind of like, you're degenning around on YouTube and you see another video or you see another chart, you see another cool indicator and you put it on your chart and then you just collect this basket of 10. And then eventually somebody like me asks you like, hey, what are all those indicators for? And now you're like, I have to justify my ego. Well, you see, bro, when this one turns green, sometimes I'll notice that in confluence with this one, but then also if this one is, no, dude, no, stop. So yeah, I mean, certainly far too many indicators is absolutely terrible. I would like to argue that you need the right balance, right? And they need to be very, very specific, right? So again, you look at PTP methodology, nice little handful of indicators. They all do a very specific thing, right? And they're all there to help check the other. And there is a process here. You only look at one sequentially after another if the other confirms. So if your initiator isn't telling you to do anything, you don't even look at anything else. Doesn't matter. Doesn't matter what they're doing. It doesn't matter if your confirmer hasn't done this in 2 years, bro. It doesn't matter if your volatility filter hasn't done this in 6 months since the last bull run. Doesn't matter. Your initiator fires. You look at your confirmer. You look at your volatility filter. Where are you at in relation to your baseline? Go. That's it. And that is PTP Classic, right? That's what the course that's currently laid out. I don't want to call it like the expedited version or the optimized version or the alternate version that's going to be going on to the online trading academy approaches the strategy creation process differently, right? Because we focus on entry, exit, and early exit first, right? And then look at confirmer and volatility filter and baseline as additions to achieve higher levels of profitability or higher hit rates, right? And they're going to work in certain markets, generally less liquid markets, and there will be restrictions, as we found out, on higher liquid markets, right, generally. But again, two equally valid approaches that are going to end up giving you the same thing, right? Indicators that do very specific things in a very specific context with a very specific strategy, and that's what you need. You need to have an absolute game plan because all traders do. Like, for example, we're looking at this chart right now. I have a long position open up on Bitcoin. I have orders set in to flip short at a certain price level. I know exactly what I'm going to do based on my analysis, no matter which way the market goes, and I'm covered and protected. You can't just trade. You can't just swing it, man. You can't just trade off your gut.
It'll only get you so far. You're destined to fail.
It's a good song, man. Yep. Thank you so much. That's a good point. Thank you, Common Man Crypto. I appreciate that.
I think we just found a bit.
Mr. Ether says it's a shit coin. Hey man, we're not talking about hex here, bro. Calm down.
Triggered.
One molecule from heroin, somebody said. Okay. Right on.
Someone's talking about Oxycontin.
Don Candon says a red heart and sends 19 Norwegian krones. Thank you, my brother. So we need to build software, Nathan Childers asks. I mean, you certainly can. But, hey, a lot of startups go down that route. A lot of startups end up broke. So if you're not already a software developer and you don't have a unique idea, probably not the best idea, but certainly learn how to code. It's just going to be good all around.
Can you do that D-Live question that's on the sheet?
Yeah. I don't see it. Oh, wait, here we go. From ETH1?
Yep.
The inventor of Bollinger Bands, which isn't in here, but that's John Bollinger, I do believe. Unless I'm thinking of John Derringer.
No, you got it.
Has labeled Bitcoin's latest movement past 10K as a head fake. What do I think about this? I do not know. I don't know if my opinion or John's matters. At the end of the day, what I would like, so this is one thing that I always say. So first off, it probably is true that the man who created the Bollinger Bands and concepts that are utilized from them, including like, hey, when this thing happens in the Bollinger Bands, we call it this. And when this thing happens, we call it this, right? Like, for example, look at my trading ideas and inventions: reversal baseline bounce, or qualifier violation, all of these kind of things, right? These are all terms that we've coined to identify occurrences that happen with our indicators. So I'm certain that it is a head fake because he probably wrote the book on this. Beyond that, the question is, okay, this is certainly a technical thing that is occurring. What are the statistics for how it plays out on this market in the past, right? So I see kind of these things. I don't want to shit on John Bollinger here. I certainly don't want to shit on the Bollinger Bands or his work or anything. But kind of my opinion is like, so what, right? Like, this would be no different, right? I respect Tone Vays, but if Tone Vays came out today and said, hey, there's a 9 on the TD sequential, like, so what, man? Like, I don't trade the TD sequential, right? I use the Bollinger Bands and kind of classic TA to show you what they're doing, but I only look at, a few small things, right? It doesn't factor into my thing, because that's a chart pattern, right? It has to be. That's a chart indicator pattern. So just like if somebody came out and said, hey, there's a head and shoulders forming, my reaction would be, I don't care, right? Because I don't trade head and shoulders, right? Or, there's an inverted doodle pattern forming. Doesn't matter. Now, if it might matter to you, like, you might trade that pattern, but you should do your research on that pattern. Like, you should do the stats, like, on this market, on what time frame, with what risk are you going to take the trade? Because what you probably didn't see from John was, this is a head fake. And so that's what he said, but here's what's missing in my estimation is this has occurred X amount of times before and has led to this. I've run the statistics on this, and it has this probability to play out. And therefore, I'm actually putting my money where my mouth is and taking this trade, right? So I always respect traders and analysts. I respect traders for trading, because trading's no joke. But analysts, they're a dime a dozen. So when you put your money where your mouth is, you can come to me with a chart and be like, hey, this is a great trade setup. Cool. Did you put any money on it? Because when you've put money on it, I'll look at your trade setup, right? Because until then, like, it doesn't cost, just like with mining, right? I just talked about this, right? If it doesn't cost you anything to make something and waste my time with, then there's no incentive for you to, like, not just bury me. And this applies to anybody, right? But, if you have shown that you have enough conviction in something, the work that you've done to put your money behind it, now we can talk, right? Now we can talk, because I put my money behind my trades. Now, having said that, I don't know. Like I said, I'm assuming, like, this head fake concept is a bearish setup. So that's going to comport with a lot of things. As I said, we're at a long-term area for the last 2 years. This has been a good, we're at a resistance level right now, a little bit below 10,000, where for the last 2 years, it's been a good idea to sell here. Okay. It doesn't take a big stretch to come up with any bearish narrative that you need to generate a trade signal. I haven't hit the technicals for mine. There are fundamental factors that might invalidate all these bearish setups. But I mean, when we get here, remember, market makers or institutions only hire the best artists to be market makers so that they can paint the best possible chart patterns for retail traders to get wrecked on. This is how it works. They graduate right from the finest University of Arts colleges. So, head and shoulders are going to appear, falling patterns, indicator patterns, all these things are going to appear at generally good areas to sell. The work comes from selecting the right indicator that fits your purposes and fits your frequency of trading.
Hey, Justin.
Yo.
With that thought, can I tell you we have 5 minutes until the mentoring session?
Bye, guys. Thank you guys so much for coming on the air. I will see you guys tomorrow. Any last thoughts?
Buy Bitcoin. Bitcoin fixes this.
Good man.
You only need 32 Ethereum, gentlemen, so that's about 7,600 USD by today's prices. That seems like a bargain.
Let's wait till it goes back to $10.
Yeah. I swear, I'm going to accumulate more Ethereum below 50.
Word.
No, good point. Good point. I mean, I think that, I think if you're at the right place in your life and you're in crypto already and you have Ethereum holdings, I don't think that I think it makes a lot of good sense to take a speculative play on it, right? And either increase your holdings or potentially, if you have a large enough set of holdings, to take a play on it. You're already in crypto, man. Like, let's roll. Ethereum's done good things in the past.
Either way, there'll be staking or pools as well. So
yeah,
guess will be interesting to see what comes of it next. But all right, gentlemen, mentoring session it is.
All right, thank you guys so much. I'll see you soon. All right. With that being said, thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Update, brought to you by the Cracking Cryptocurrency Premium Trading Group. If you would like to join our community of professional traders and begin building your own objective trading system, make sure to check out everything that we offer at premium.crackingcryptocurrency.com. Link in the description below. If you guys enjoy the content, make sure to subscribe to this channel on YouTube. You can also follow us on Twitch and DLive. The bell icon is the only way you're going to get notifications because YouTube has gone away from the subscription model, just letting you know. And we really appreciate it if you smash the like button on the way out. It does help us get the message and knowledge out there to people who really need to see that so that they don't find something else. Anyways, links are also in the description if you guys want to support us. We trade, the exchanges that we trade out are down there. There'll be benefits to clicking those links. They help support us and they help support you. So down there, everything you could possibly need to survive in crypto and in life and the markets in general. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, they go in the comment section. We do respond to comments. We will not ignore you. You will be heard. This is a safe place. And we will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin. Make sure to join us in the Discord. In the meantime, that link is down there as well. Great resource for experienced and beginner traders as well. And as always, until tomorrow, trade safely and be awesome to one another.